Today, I'm going to talk about understanding the 5 things that affect your credit score. Not just yours, also mine. And if you want to learn how to build your business credit, I got the perfect blueprint in the description below. And it's a free ebook I made just for you. It will also tell you how to get about $100K in business funding. The 5 things that affect your credit score. First, payment history. Payment history is going to make up about 35% of the pie that's going to affect how good your credit score is. Now, when you think of payment history, think about late payments, any collections, derogatory marks, stuff like that. If you do, make sure to get this stuff disputed off your credit. And you can just, all you have to do is find incorrect information and kind of send out letters to the credit bureaus. They're going to knock these off your credit report. And if you need help, you can reach out to me. Other than that, second most important thing on your credit report is the amount of debt that you owe. I said 35% for payment history. This one's 30%. Now, when I say amount of debt, think about revolving utilization, and you can think about credit cards with this, and then all your credit cards, how much do you owe on them? Make sure to keep them under 29%. Then also think about accounts with balances. So not just credit cards, think about your loans, mortgages. Well, when I say loans, think of installment loans. So it would be like mortgages, car loans, stuff like that. So it's not only credit cards, it's any type of loan that you owe to an institution or bank or business. The third thing that affects your credit score is the length of your credit history. This is why I need to work on myself. Is this takes about 15% of your credit score. So the top 2 plus this right there, that's 80% of your credit score. And think about this when you think about credit history. You have an account that's open 8 years. You have an account that was just open 1 year ago. Your credit history is probably going to be a lot more towards the lower end because you recently opened up an account 1 year ago. So your average age is what the credit bureaus, banks, and all of them use. And you want your average age to be at least 5 years or more. And you can also buy trade lines when you want to increase your average age. Now, the fourth thing that affects your credit history, credit score, credit report is basically the amount of new credit or hard inquiries. And this is when you go apply for a new loan, you get the loan, you go apply for a new credit card. You get the credit card, that bank or whoever you apply for the loan with, they're going to check your credit report. When they check your credit report, it's going to pull a hard pull on your credit report, and it's going to be a hard inquiry. Basically letting the credit bureaus know, hey, this person just kind of applied for a loan, credit card, or some type of funding. With this amount of new credit, you want to keep this around 1 to 2 hard inquiries. Try to stay 0 if you can, but it's going to be hard to stay at 0. But 1 to 2 is in the good range. It's okay to be 3 to 4 hard inquiries on your report. That's in the fair range. And remember, if you do not have the card open on your credit report and they have put a hard inquiry on your credit report, you can turn around and get that hard inquiry knocked off by calling which bureau it is. So either TransUnion, Equifax, or Experian. Experian is the easiest one to get your hard inquiry knocked off. TransUnion, on the other hand, not so. The fifth thing that affects your credit score is basically your total account / credit mix. This makes up about the last 10% of your credit report. So think about it. What type of accounts have you opened that's reporting to your credit report? So you got revolving accounts such as credit cards. You have installment loans, like I was saying with a mortgage, car loan or something along them lines. You got bank issue credit cards accounts. So them are, to name a few, the type of accounts you can have. Think about this as well. Lenders like to see if you're using a variety amount of credit, not just all on credit cards. They want to know you're able to handle a mortgage, a car loan, a personal loan. They want to see a credit mixture of all type of debt to see if you're able to manage it. So with that being said, you want to have at least 11 counts open on your credit report. And with it being open on your credit report, it's going to put you in a more fair category. It's saying that you're able to manage different types of credit, and it's going to look on your part. Like I said, them are the 5 things that affect your credit score. And if you want to learn how to get 100K, 150K in business funding, like I said, click that link in the description. You get your free ebook that I created just for you.